So the monthly jobs report is always kind of a temperature check for the U.S. economy. I didn't think this one was as important because it's looking backward at a time when everybody's worried about the future. But, you know, it did show steady growth in the labor market. 151,000 jobs were added last month. Again, solid number, slightly lower than expected, as we mentioned earlier, with an unemployment rate of 4.1%, a tenth of a percent higher than the previous month. But again, the big question here is what happens next. How will the President's tariffs, say, and the uncertainty over next steps there impact and investment and hiring? China and Canada are both starting retaliatory tariffs next week. Could the federal workforce and the cuts being made and proposed by Elon Musk and Doge have an effect, even if it's a ripple effect? We don't know yet because most of them came after the monthly job survey. Now, the Fed chairman, Jay Powell, spoke today, said the economy's in good shape from his point of view, and he's waiting for more data before making any moves. Listen.
As we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity.
Here now, an economist who's more interesting to listen to than Jay Powell, Mark Zandi, chief economist at Moody's.
I'll take it.
To them. Yeah. So, all right, so start actually with that analogy or metaphor that the Fed chairman is using about the difficulty in doing the job right now, whether it's your job or his, and seeing the signal through the noise.
Yeah, a lot of noise, a lot of drama, a lot of chaos, a lot of uncertainty. And of course, Connell, we've talked about this before, when you have this kind of uncertainty, business people just kind of sit on their hands. And you're right, we didn't really see it in the job number for February, but I suspect by this time next month, if you have me back on, we'll be talking about weaker job numbers because that uncertainty is really placing a pall over the economy.
Now, we talk all the time, every time you're on, it seems about inflation to some degree. But as I mentioned right before the last break, another word is being used to put up the article from the Wall Street Journal. And they say the two-headed monster stalking the economy has a name, and the name is stagflation. So stagflation, the quote there is that Fed officials thought they might have engineered a soft landing over the past 18 months. A few are publicly warning of a stagflationary scenario. Explain why that's a real problem.
Well, that's not good. Stagflation is higher inflation and weaker growth. That's a lethal combination. And, of course, tariffs, trade war, aggressive deportations, restrictive immigration, all those things lead to higher inflation and weaker economic growth. So directionally, we're moving into a stagflation kind of environment. Now, having said that, this is nothing like the 1970s and 1980s, and nor will that ever happen, because if it ever looked like it was, the Federal Reserve would step flat on the brakes and shoot up interest rates and sacrifice the economy to the altar of stable inflation. So we're not going down the stagflation path, but directionally we're headed in that direction.
So you're worried about a recession at some point in the United States, and if so, how far out do those worries kind of begin to be real?
Yeah, I'm worried. It depends on what the president decides to do or not do around particularly around the trade war. I mean, if he follows through on all the tariffs on Canada, Mexico, China, he's talked about tariffs on the European Union, autos, pharmaceuticals, steel, go on and on and on. If he actually goes forward with those things, not only will we be dealing with the uncertainty, but the reality of, a tax increase, a pretty big tax increase on a lot of stuff that we buy. It's going to be very hard on Americans, particularly lower middle income Americans and businesses, particularly smaller businesses. And the fodder for a recession is pretty high. And you can see it in the stock market. That's why the stock market's been kind of sliding south here, because investors are beginning to discount the possibility that, hey, this might not go in a very good direction.
Thanks so much for watching. Just go to joinnn.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.